Hello, 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 and a massive hello to everybody. How's everybody doing? I hope everybody's having a great weekend. This is 50 pips, rocking and rolling 0706 2015. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's happening, guys? Go rolling into this week. I mean, it's a fair, we still have a lot of geopolitical and event risk out of Greece too. But really, this week, the focus in terms of the daily calendar is more going to be out of China, Australia, and New Zealand. So we'll have to see what that brings. So we still have those G7 meetings going. We'll have to see what gives there. We do have quite a lot of data out of China. We have that trade balance coming out. We've still got, some building permits out of CAD. And again, we do have CPIs out of China. Again, is going to be important with more Australian data. RBA Stevens going to be speaking. And, we do have some stuff out of the UK. But really, it's about Wednesday. The big event risk is on this RBNZ meeting. So that's going to be very interesting to see. And then we do have unemployment claims out of Australia again, more industrial production out of China. So again, pretty much the first front load of the week is all about China, Australia, and New Zealand. Then we do have those core retail sales unemployment claims out of the U.S. on Thursday, and then some, the PPIs, University of Michigan on Friday. But really, so the back end of the week loaded more towards focus on U.S. data, the front part, as we said, New Zealand, Australia, and China. So we'll have to see what happens. But don't forget all the Greece stuff on the wires could make things very, very tricky and volatile in an ever choppier market with very, very thin liquidity. Liquidity is really drying up across the board. So, you'll have to keep that in mind. So what's happening? First things first, on Euro. Not an awful lot. Remember, we've got this... let's do it this way. We've got this black rectangle, if you want. This is what we were talking about, that we expect that unless something big happens, in terms of rate story out of the U.S. or in terms of Greece, we expect price to be chopping inside this range for quite some time. That's pretty much the 107.30s and 104.50s. Should we get daily closes below the 107s, then we'd expect this to be very, very heavy and really try and take a good stab at these yearly lows and accelerate lower. Should we get daily closes above the 114.50s, we'd expect this to try and get a lot of traction and move back possibly into, January kind of trade all the way back into the 118s, 120s. But so far, everything's behaving as we've been expecting so far. So remember, those 1090s are a pivotal level. It's a multi-confluent zone. You've got all kinds of fibs, levels, moving averages around there. You also have, here, remember, that was the spike high from that old big FOMC range. And you see how that level is being protected pretty much to the pip, so previous resistance FOMC range now acting as support. So let's see what happens. The way I'm looking at this, nothing much has changed. To a certain extent, most of the charts are the same. I was debating whether I should do a video this week or just do a Q&A video or talk about something else, but I know people like to do the chart reviews. So here we go. So look at this. I'd say look at the 110.90s from a closing basis on the daily, right? As long as we keep on closing above, then there's a chance we'll keep on bouncing towards that 112. If we start closing below that 110.90s, then expect the market to be very tempted to come back down and close, and close in on that 108, 108.50 level, okay? Now, again, if you want to look at it in terms of a blank chart without anything on it and a daily, just to keep things clear, what does it look like? Well, it does look like it's trying to base, it's trying to put in some kind of an upward rotation. If you start to put some moving averages on the chart, you see multi-confluent zone, as we discussed before, of support here. But, it's still getting sold here. It's still very choppy. I think, what we discussed on the other chart still prevails and is really the focus. Now, what's happening on cable? Cable, very similar thing. We discussed the fact that, we were expecting a pretty decent bounce off that first touch of that confluence zone of the 50 back of that rotation higher in the 100 DMA. right? Also beautiful confluence with this range high from that FOMC range coming in, previous resistance acting as support, and we did get a bounce. On the move back down, I'd put a lot of this down to the thin liquidity. It's very choppy, so I wouldn't be so focused so much about velocity of move inside range here. The way I'm looking at this is, as long as we still get a closing, but from closing basis on a day, as long as we still close above these 150, 180s, we hold above this moving averages, we could easily test back into the 155. If we start to close below here, then this could get heavy and close back all the way into the 150 mark. Broadly speaking, I think this is a very choppy range, similar to that broader range we drew in black on euro with that rectangle. So it's very tricky. It is very tricky. Again, here also, if you're looking at it from on a blank chart on the daily, and you just slap some moving averages on here, what does it look like? It looks like it's trying to base, as we always say, if the levels are good, you should be able to see the same thing pretty much on any chart. Bottom line here is there's a lot of choppy action. I think you can probably try and make a pretty decent case to the long side and to the downside, and I think that added with the low liquidity chop with the headline risk means that we're probably going to get a lot of velocity inside these ranges, and it'll take something pretty substantial either out of Greece, either in terms of geopolitical risk, or either out of rates in the US for us to really break outside of these choppy ranges. And if you talk about the ES, we've been saying a lot of things. We might need to print higher before we get that bigger correction. But as far as we're concerned, the story doesn't change. We understand this is still holding bid. We understand that unless there's a significant change out of the US data, this could continue to rip higher. But the only way we're looking to play this is, as we've been discussing in all the updates, tactical shorts into these, all these 2119s for moves back into this bottom range. And so far, that's been working. Right now, keep an eye on this ascending trend line going into the week. If we break below, get some traction below there, then I would expect the ES to try and accelerate all the way back down into these 2056s. And why not start to get a much, that healthy correction, try and take a stab at that. But if we can't get daily closes below this ascending trend line, don't be surprised to keep on seeing repeated tests of those 2119s, which are going to be an interesting zone to keep an eye out for, right? Now, Kiwi's been getting hit much harder than Aussie, right? Everybody's starting to talk about this rate cut this week on Wednesday out of New Zealand. And again, I'm just going to be boring self as usual and just say, be cautious about, sell the rumor, buy the fact, or whatever happens. We've seen a lot of this kind of action this week, this year on Aussie and Kiwi, and pretty much they've been getting sold very hard into data and into these rate decisions. And then irrespective of the outcome, we've been getting decent bounces. So just, the only word of caution is don't get stuck shorting size and aggressive leverage into lows, right? Now, so clearly here, as long we talked about the market trying to protect that 71 level, which hadn't been tested for an awfully long time. And you see that we did get fairly decent attempts at protecting that level. Now, as long as we hold below that 71, there's very little support, and there's not an awful lot of reason for this to bounce aggressively, right? So if you step back and look at something like the weekly chart, you see that daily closes below the 71 will be very, very heavy. And even though you do have some intermediate kind of support here, if this starts to sell off aggressively, the next level I'd be looking at is, the 66s, some kind of protection of that 66 zone further down. The only thing I would say is, nothing only moves in one direction. It would be healthy to see some kind of little bounce here. So again, don't be surprised if you see some kind of bounce. Then we'll have to see what the story is and what's coming out of the RBNZ. Clearly, if there's no cut, then one would expect to see a fairly decent bounce. And again, it depends what they say along with the cut, because it's still decent decent interest on this. So we'll have to see what happens. But clearly the focus is to the downside. I just always caution when everybody seems to be looking at something in only one direction. But clearly that 71 is going to be the pivotal level. Now, in case you get an aggressive bounce, you know, unless we start to aggressively trade above 73.60s, you know, this is still very, very heavy. You know, even if we'd make it up into the 76s, long-term structurally, this is still very, very, very heavy, right? But again, you know, that 73.60s first interesting zone if we do get a bounce, and you know, 71.00 pivotal level, bullish above, bearish below from a daily close. Now, what has been holding nicer is, you know, this Aussie, right? And it does look like it's getting a fairly decent attempt to defend those 75s. Now, keep in mind that if those 75s go, then, you know, it'll start to look fairly heavy, right? So it's all about that 75 mark for me going into the week and into all this data. So keep in mind that as long as we don't take that out, the risk is to see some kind of short covering, some price popping above it. You know, as we stand, the bull bear line going into the week are pretty much these 76.20s. You know, below, market is going to be extremely tempted to cause more pain to the downside. Closes above, well, then we could easily see some kind of a pop back into the 77.50s, right? I don't think there's any change of tune here in terms of pressure on, unless we trade above the 180s from a day close perspective, okay? But very interesting zone. Now, to a certain extent, I think, you know, Aussie and Kiwi, similar charts, but I think the Aussie, at least into Wednesday, is a lot more interesting because it is showing a bit more sign of support. Once we come into Wednesday, pre RBNZ, post RBNZ, I'm going to be very interested to see if there's some tactical opportunities on Kiwi shaping up. Okay, so I hope you enjoyed the recording, guys. Thanks for listening, and as always, have an awesome one. See you guys on Twitter. See you guys for London Open. And I haven't forgotten, I've promised to try and record a video with some Q&A or a bit more discussion about the weekly webinars, because a lot of people are asking me, keep on writing questions on, you know, what exactly do you do in those webinars? What is it? And I'm going to try and do, there's plenty of stuff on the blog, but I'm going to try and record a video. I don't know when I'll get to it, but I'll get to it, okay? Have an awesome one. Thanks for listening again. Take care, guys. Bye-bye.